action, focus, discipline. This is the Zero Excuses podcast. Each and every week, we talk to high-performing, inspirational athletes, entrepreneurs, and leaders. We ask powerful questions to extract their tools, strategies, and life lessons for you to crush your excuses, to break out of your comfort zone, and accomplish your ambitious dreams and goals. Here's your host, Kenyon.
Hey guys, what's going on? Welcome back to the Zero Excuses podcast. I really appreciate you guys taking time out of your schedules to join us here today. We've got another great guest lined up for you guys. We have Cody from Cody and Company. He is a CPA who specializes in helping small business owners navigate the complicated world of taxes. And you know, taxes may not be at the forefront of your mind at this time of the year. We usually only think about that between January and April, and most of us, myself included, typically only spend a couple days worrying about taxes. And I'm starting to quickly realize how important it is for us to pay attention to keeping track of our tax records throughout the year. And Craig really helps his clients implement a comprehensive tax plan throughout the year, and that's what he's here to talk to us about today. So before we get into the conversation with Craig, just have a couple quick reminders. First, if you haven't already done so, would appreciate it if you head over to iTunes. Could do so at kenyonziska.com/iTunes and leave us a rating and review. It goes a long way in helping get the message out about what we're doing here at the Zero Excuses podcast, and helps people find us and lets them know that you get good value out of the show, and appreciate everyone who has left a review to date. And while you're there, if you know a friend or family member who needs to hear the topics and the conversations that we are having here on the show, would also appreciate it if you share it with them. Also, if you haven't done so already, encourage you to hop into our free closed Facebook group over at kenyonziska.com/group. It's a great community that we've formed around the podcast here to continue the conversations that we have here on the show, and to just talk about the topics, talk about discipline, eliminating excuses, and just grabbing a chokehold over your life and living it the way that you want. All right, guys, enough on all that. Let's get into the conversation with Mr. Cody. Cody, thanks for taking time out of your schedule today to join us here on the Zero Excuses podcast. Excited to have you on and talk about taxes. I know this isn't probably at front and center in people's minds at this part of the year, but I think it's an important topic, so I'm really excited to have you on.
Well, thank you very much for having me. I'm excited to be here.
So why don't you introduce yourself a little bit? I can rattle off a few stats about you, but I think you can introduce yourself a little bit better than me. And why don't you tell our audience a little bit about yourself, what your background is, and what you particularly specialize in?
Sure. So I'm a CPA, certified public accountant. I'm located in New York. We have clients across the country. This is a second career for me. My first go-around, I retired from the New York City Police Department as a lieutenant about 18 years ago. My first go-around in college, I was an economics major, decided to follow my dad's footsteps, joined the police department, expected to retire as a chief one day. Life kind of gets in the way, and you decide you want to maybe have a little bit more control over your life. Mm-hmm. Went back to school, got my accounting degree. When I left the police department, I worked for an international firm. I guess about 10 years, I really started my own business. Mm-hmm. Right now, there's 9 of us here. I have 3 other CPAs, and we specialize in tax planning for business owners. So that's the focus of everything we do. Is it all starts with tax planning and showing them ways to keep more of what they make legally.
Okay, so explain what you mean by tax planning, because I think that most people, their mindset is they only think about taxes 1 or 2 days out of the year. They compile their paperwork, they keep, they squirrel it away in a folder, then they walk into one of those fancy places in the mall, drop it on someone's desk, and spend 1 or 2 hours on their taxes every single year.
And that's the exact opposite of tax planning. So what tax planning is really, it's all about communication. working with your CPA or your accountant on a fairly regular basis. We work with our clients. We typically communicate with them at least once a month. But it's all about, if you do planning, you're looking for legal ways that you could take advantage of what the government says you can do. So if you were Donald Trump or Warren Buffett, they all have scores of advisors that work on legally lowering their tax bill. So what we do for business owners is we do the same thing. We look for opportunities or missed opportunities, legal ways that the code says you're allowed to do things, and that's going to reduce your liability and allow you to keep more of what you make and use that money, whether it's to put back into your business, to go on vacation, put into a retirement plan, whatever it is that you want to do, buy shoes, that's something that you have control over. And planning doesn't happen all at once. It's a continuous process. And if you think you're going to go to your tax person in February, March, or April, and you're going to get some significant planning, that guy or girl is going to have their head down and they're buried with work, and they don't have time to do planning. So that's why it has to be a process that you do it throughout the year.
Okay. So, when we hear about legal ways to keep our money, a lot of our maybe our grandparents or something, they've instilled some ideas in our minds that hey, that's something sleazy. We all should be paying our fair share. When you work with clients, how do you help them overcome some of these maybe long held preconceived notions about paying our fair share of taxes? And how do you get them over that hurdle?
So when we do a tax plan for somebody, we actually also give them the code section that says you could do what you want. So if the government says you can do it, I would assume that's playing fair.
Yeah, that's pretty simple. And,
right.
A lot of people have a tough time getting over that, and that somehow they're cheating the system. But what are some of the big surprises that you awaken people to on what they can do? What are some of those big things that you steer them towards?
Well, a lot of it isn't really rocket science. One of the biggest mistakes we see is, people fail to plan. So if they took a little bit of time, if they spent as much time that they do researching that new car or truck that they're going to buy, and they did a little planning on their taxes, they'd save a lot of money. So that's the one big mistake. Another big mistake is, operating out of the wrong type of business entity. So are you a sole proprietor? Are you an LLC? Are you a multi-member LLC, taxed as a partnership? Are you a corporation, an S corporation? So what planning went into that? And typically the planning is, I wanted to start a business. I called my attorney, or I went online because I heard so-and-so tell me to form an S corporation or whatever it was. And this is what I did. And I tell people, what you should do is have your CPA and have your attorney and you have a short conversation and figure out what's best from a legal perspective and what's best from a tax perspective. And maybe you could get the best of both worlds. So that's the type of planning that should start when you're talking about the entity you're going to operate out of. Because choosing the wrong entity could cost you a lot in taxes.
Okay. So what are the major differences between some of those entities that you mentioned, S Corp, LLC? I think those two are probably the most common, if you're kind of starting from the ground up. What are the differences there? I know everyone's situation is going to be unique, but what are the key differences there?
So the key difference is self-employment tax, whereas if you're in a single member or multi-member LLC, basically all of your net income is subject to self-employment tax, which is about 15.3%. Mm-hmm. So that may make sense depending on what's going on in your life, but it may not make sense. Okay. Maybe an S Corp is a better way to go. All right. But you have to do the analysis and see what works better. So just because an S Corp may be best for me, it may not be best for you.
Okay. So an S Corp, I guess, is that more along the lines of a sole proprietorship?
No, a sole proprietorship is more along the lines of a single member LLC in that, it's filed with your personal tax return. There's no other tax return that needs to be filed. Whereas when you get into an S corporation or a corporation or even a partnership, they all have their own separate tax returns. So depending on your situation, the cost, just that cost alone may not make sense. Also, is it a side hustle? What else is going on in your life that, have an impact on all those different things? So me and you can be in the same business, and an LLC might be the way to go for me, but maybe an S corporation is the way to go for you.
Okay. So when do we start to think about taking our side hustle and starting to form an LLC or an S corp, whatever fits our, I guess, our pattern? Where is that threshold?
I mean, I think the threshold should be when you start your business, because you want to have some kind of protection depending on what you're doing. But It's always good to have, on a legal side, and I'm not an attorney, but a little bit of protection, whether you're forming an LLC, you're being taxed as a sole proprietor, or you're an S corporation, you have that the protection offered by a corporation. So, I mean, day one isn't a bad time to do that. Typically, it's not going to cost you a lot of money to set it up, but you want to set it up correctly and you want to choose the right entity. Yeah.
Okay. So kind of shifting gears a little bit, I want to back up to a little bit, because I know we kind of went down a rabbit hole that, this is some of the questions I'm asking. I'm not gonna lie, but some of these are personal questions to me, doing this podcast and some of the other things that I'm doing. But I wanted to back up a little bit and dig into your background a little bit. Why are you so passionate about, helping people with their taxes? Is there a personal experience that you had with your taxes along the way that kind of spurred this passion in you?
I always liked numbers, and I was, like I said, my first time around, I was an economics major. And originally when I was going to become a CPA, the idea there was I was going to be in financial services, and I figured set myself apart from all the other retired police officers out there and have a license behind me. And I really fell in love with, taxes and planning, because I saw nobody's really looking. Most accountants are more looking at getting the right number in the right box than being proactive and looking for things that you can do to lower your liability. What they say, if you really love what you're doing, it's not like you're working.
Awesome. Yeah, because, I can imagine that, like I mentioned in the beginning, most people, they don't pay attention a lot to taxes. And, personally, I've used those little kiosks in the mall, probably more times than I care to admit. So where are those, what are those particular, areas that you most commonly can find, I guess, tax efficiencies, I'll call them?
Okay. So we already talked about having the right business entity.
Yeah.
Okay. We have, we'll just touch on having the right or wrong retirement plan. What's going to allow you to put away the most money, give you the biggest bang for your dollar. Hiring your kids, family employment. Can you hire your kids? Can they do work for you? Can you, make their hockey camp tax deductible? So if you hire your kids and the court has ruled you can hire your kid as young as 7, I like to recommend 11. And as long as you pay them reasonable wage, that's a way you could pay them. And the money goes into their bank account, and either you pay for their camp with that, or they put that into a Roth IRA, and down the road they have all this money. So that's one thing. Medical benefits and medical expense reimbursement plan. How do we pay for our kids' braces and make that tax deductible? Certain types of entities, we set up a medical expense reimbursement plan. The home office, are we working out of our home? Do we actually spend 15 hours a week in our home? There's something called a home office deduction. That actually opens up the door to travel from one office to another, if you have another office, or for travel from your office to your client. It also opens up the home athletic facility that can make your home gym or your home pool tax deductible. So these are all things that are typically missed out there.
Wow. Some of those things I definitely need to maybe implement. And in fact, the home office is something that, me and my wife have personally taken advantage of, but I have not heard of the travel or the home gym deduction there. So what sort of, I guess, how do we document this so that we don't get ourselves in hot water with the IRS? What are some things that we can do to document these things? So the key is actually documenting it. So if your kids are working for you, they need to sign in when they come in. They need to sign out when they leave. So you have the time there, and you have that over the course of a year. You don't do it all on December 31st or April 10th. Make sure that you're paying them a reasonable wage. If it's a home office, obviously it's got to be space that's used for nothing else other than your home office. So everything does need to be documented. And when we do a tax plan, we'll help you with the documentation process. But like I said,
not rocket science here. Just make sure that whatever you're doing it correctly and you're documenting that you're doing it correctly. Because if you just do it and don't document it and the IRS comes and asks a question, you're not going to be able to answer that question.
Okay. So essentially we can just keep a paper and pen log, or can it be electronic? As long as it's some sort of document.
Correct. I tell people keep a paper and pen log, especially when it comes to kids.
Okay. Yeah, and that's that's gonna be an awesome tool. My daughter is turning 4, so that's just over the horizon. So,
correct.
Got my palate wetted to get her. A
few more years.
Yeah. The other question that I wanted to ask you is, for us to be able to claim a home office, do we actually have to own our house, or can we write off, like if we're renting, can we write that off as well?
Well, you could rent that. You could write off that portion that's attributable to your home office.
Okay. And does it have to be a dedicated room, or can it be like a segregated corner?
It has to be a specific space.
Okay.
So it doesn't have to be a whole room, but if you have a desk in your bedroom, okay, that's probably not a good idea to go. Okay.
But if it's permanently set up as that workspace,
right. Okay. But and then remember, then you only have a small percentage of your total square foot, so the deduction is very small. But it does open up the other options for like the home athletic facility and travel back and forth between your office or your clients.
Okay. So can we just write off our mortgage and our property taxes, or is it go way beyond that?
So it's your utilities, it's your maintenance. Okay. It's everything that's associated with, that house.
So it kind of makes sense for pretty much all of us, to anybody out there who's listening to this right now, to maybe start some sort of side hustle. It seems like we also can't completely, show a net loss with our side hustle year over year, right?
Correct. It's not a hobby. It's a business, and a business is to make money. So you should have be generating some income and look to generate income.
Okay. So is it like, can we show a $5 profit over the year, or do we have to show a trend of increasing profits year over year? Or can it just be?
You have to be actively involved in that business. Okay. And trying to generate profits. Okay. So I would not, go and expect to get all these write-offs and pull a loss year after year after year and be able to sleep well.
Right. So is there a particular threshold that you tell your clients that they should shoot for? Should it be you should have a profitable business after the first year, 2 years? Well, when does the IRS really start to scrutinize you?
Well, our clients want to make money. So our clients are all trying to make money year one. So we're not looking to make $5. We're looking to make money. So, when you get into those other ideas, like, well, I only have to make $100 this year or something like that, then you're playing with fire.
Yeah.
So I would, have a legitimate business that I'm running, and I have space in my home that I'm legitimately using only for my home office, and do it that way. Otherwise, I would not take that deduction.
What goes into what are the key components of a solid tax plan? I know you mentioned making sure we have our entities set up. What are some of the key routines and habits that you have your clients practice, maybe on a weekly basis or a monthly basis, or whatever that interval is?
So with us, when we do a tax plan with a client and then we go on to work with them on a regular basis, every month we set up a call with them, or a Zoom call, and we go through their profit and loss, and we answer any questions and what's going on. And it might be a 5-minute call, might be a half-hour call. Mm-hmm. But it's just to give them feedback so they know what their numbers are, because having good information you can do good things with. And other than the good information, it allows us to make sure that they're doing what we told them to do, and it's all being documented correctly.
Okay. So as far as someone who might be working a full-time job and having a side hustle, what I guess is the best way for us to maybe not get overwhelmed? Should we be, I guess maybe kind of walk us through what we should be doing, maybe on a weekly basis. So that we're keeping our head above water.
Right. So you want to know your numbers. That's the main thing. Know your numbers. So track your income and then your expenses, and be able to actually look at those and know what they are. So if you're doing marketing, if it's a side hustle and you're trying to grow something to turn into your full-time job, is the marketing working? How well is it working? Then track your marketing, what you're doing and what's that generating, and maybe one type of marketing is better than another. But by knowing your numbers down to that granular level, you could make a lot of informed decisions. And that's what's going to, good informed decisions are typically going to help you grow your business faster.
So what are some of the, like when you bring a client on board, what are some of those common mistakes that you find are being made by them? So
when for us, before we bring a client on board, we do a tax plan before we bring them on board. So for us to get through the gate is we've already done that tax plan at this point. We've already found their mistakes. We've pointed them out. We've gotten them on track to correct those mistakes. And now we're just monitoring that on a monthly basis along with their profit and loss and balance sheet to see what's going on. So we typically identify the mistake during the tax planning process, give them the solutions, and then during the ongoing process, we are making sure that they're doing what we said they should be doing.
Okay, gotcha. So, this really sounds like this is a lot of common sense stuff. It's just people have to get into the habit of doing it on a continual, ongoing basis.
Correct. Yep. It's not rocket science. It's just, do it. Don't stick your head in the sand. Don't expect to go to your tax guy or lady in February, March, or April and getting it done with any type of real, other than putting the right numbers in the right boxes. So it's all about really keeping more of what you make. And if you communicate with your CPA on a regular basis, they should be able to help you do that.
Cool. And say we are, we have a side hustle. What do you recommend that we, how much should we set aside from our net income, for taxes? Is it 20%, 30%, 40%?
It's probably better to be on the safe side, depending on where your income level is on your first job.
Yeah.
I would say somewhere between 35 and 50% to be safe.
Okay.
So depending on the type of entity you're on, but as a general rule, 35 to 50%, you're probably okay.
Yeah. And when should we start making those quarterly payments to the IRS with that stuff?
What the government says is you have to pay in, basically your prior year tax over the following 4 quarters. So when your tax preparer is doing your tax return, they should be giving you the guidance. Okay, you need to make these estimated payments.
Okay. And do we simply just write a check to the IRS? What's that process look like?
Yeah, that process is either writing a check or doing it electronically. So the government has all your information, and electronically is usually not a bad idea because less mistakes happen that way.
Mm-hmm. Cool. Well, like I said, this is all pretty straightforward stuff, and I'm not gonna lie, I need to step my game up in this area a little bit here, based on what we've talked about here. But we're starting to run a little short on time. But what I definitely wanted to make sure that we left a few minutes here at the end for you to let us know how we can get in touch with you if what we've talked about here has piqued people's interest. How can they get in touch with you? And do you have any sort of products that you have to offer?
Sure. Yes. So we are going to offer your listeners a free copy, a paper copy of our book, The 10 Biggest Tax Mistakes That Cost Business Owners Thousands. And if we'll give it to you for the show notes, but our website is craigcodyandcompany.com. And if you go to /0, there'll be a little opt-in box to request a copy of our book, and we'll get that out to you.
Awesome. Well, do you have any last minute knowledge bombs you want to drop on us?
Just definitely communicate with your tax professional, and the more you communicate with the right person, the more they should be able to help you save. And just remember, it's not about putting the right numbers in just about putting the right numbers in the right boxes. It's about proactively keeping more of what you make.
Awesome. Well, thanks again for taking time out of your schedule to join us here, and look forward to staying in touch with you.
Thank you very much. Take care.
Alrighty, thanks.
Thank you for tuning in to the Zero Excuses podcast. Join the conversation at kenyonzitska.com in our Facebook group. And don't forget to rate and subscribe to our show. We'll talk to you next week. And always remember, results, not excuses.